Good afternoon. I think the market after the Modi win has moved higher and probably will continue to move higher, and this move will be led by both large and mid cap. So I would clearly invest in mid cap as well, because many of the mid cap companies, after the past crashes, they have cleaned up their balance sheets. The companies are better. Also, it's a new cycle which is going to come up underway, post the elections. So I would clearly buy both large and mid cap.
Okay. Chakri, let's also, get in a view as to what your outlook is on the cement space, because we have seen FY19 witness pretty stellar double-digit volume growth for the first time, incidentally, in 9 years. We're seeing even, the commentary from the managements as well turning fairly positive. Is this a sector that you'd like to visit?
Good afternoon. Yes, clearly yes, because if you look at the last 3 years, while the volumes have been, ebbing and flowing, going up and down, price increases have hardly been there. Every time the cartel commission comes after them in terms of price collusions and all that good stuff, actually, in reality, the price increases has been less than that of the inflation rate. So if that is the case, then let's say that these companies take a 3-4% price hike. That's well below the inflation rate of about 4%. Now, if they do that, I think the operating leverage that will flow through to the bottom line is still not yet recognized in many of these companies, whether it's the large cap like Ultratex or even the mid caps like Heidelberg, Ramco Cements, JK Cements, etc.
Okay. There's some pharma numbers that are keenly anticipated today. What is the outlook in particular on Sun Pharma, given the fact that we have seen some of the cost pressures ease, the domestic business has been on a strong growth trajectory? What are you penciling in here?
Given that there's so much more exciting stuff in other sectors, pharma is a sector we've completely stayed away from, and we have hardly any exposure at this point, except for the marginal Dr. Reddy's and Aurobindo Pharma, but really wouldn't know much about Sun Pharma to comment on the numbers right now.
Okay. Here's a word then from N. Jaykumar from Prime Securities, who believes that there is a good need to be strictly stock specific at the current levels in the market. He remains positive on the road sector, expects large order inflows for this particular space.
This is a market you need to be brutally focused on stocks, because the same sector you could have stocks that go bust and stocks that hit new 52-week highs, and that's going to happen. You see the aviation space, for instance, every space, I think it's going to be a brutal discrimination between one stock and the other. So in every industry you'll find this, but there may be some stocks that have the tailwinds of growth. So I think, for instance, the road sector could get huge orders, because one of the manifesto mentions, if you will, is that there is connectivity both digitally and physically, which means that you're going to have right down to the smallest talukas, etc. You're going to have connectivity digitally, and you're going to have roads, bridges, highways, etc. built. And it's been seen that that ministry has actually performed exceptionally well in the first NDA regime as well. So given that kind of thing, and then there could be the other mention, which is pipe water to people down the to the length and breadth of India. Now you could look at companies that are in this space and draw your own conclusion. 3 or 4 companies will be huge beneficiaries of orders. At the end of the day, whether these orders are profitable, etc., a different question. But at least in terms of a space, I think the infrastructure and the pipe space could be interesting plays that we could see. The other, and I mentioned PSU Bank. So these are, I would say, 3, and of course the infrastructure of the transport infrastructure, which means aviation could be one, roads could be the other, railways could be the other, and they could be beneficiaries of these, because all of these represent benefits to the mass as a whole, uplifting what I call the base of the pyramid sort of moves up. And if you look at that as a thing, the first 2 years money is going to be spent on these.
All right, that's the word coming in from N. Jaykumar. Just a quick glance at the currency, 69.7 to the US dollar as we speak. So Chakri, you were talking about how you are not looking at the pharma space very closely because there's a lot more exciting opportunities. So what's looking exciting then according to you in this market? Where do you believe that one can look to initiate fresh buys?
If you look at infra, as Jay was just talking about it, if you look at the same infra companies 3 years ago, 5 years ago, had balance sheets with high levels of leverage. Today, they're far stronger companies with good, decent levels of leverage. And second, in the last 4 or 5 months, because of election, a lot of the ordering activity and execution, more importantly, kind of slowed down. And the order book is still there, but now elections are out of the way. It is clearly the new government's Modi's 2.0's focus area to build all these roads, bridges, etc. So against that backdrop, you would buy infra companies. You take, for example, a PNC Infra. This company has guided for like a 40% revenue growth. Now, against that backdrop, the company's valuation is probably trading at about 12, 13 times. You take Nagarjuna Construction, which is present across spaces of infra, and that company is also trading at probably about 10 times. So, and of course, Larsen & Toubro is the largest one, the bellwether in the sector. So, basically, right from the largest company to the companies down the line, I think there's sufficient opportunity to invest even at current levels and make a decent upside of north of 20-25% over the next year.
Let me just quickly mark some of the names which are seeing a fair amount of traction, and within the futures world, let's just mark a couple of volume buzzers in there. Yes Bank, for instance. Now this is one stock which has been holding very smartly for the last 2 days now. The volumes are high and they're higher than the daily averages, 3.6% higher for the stock as well. ICICI Bank, HDFC Bank, Z are all names which are seeing quite a bit of traction. On the way down, it's Diwan Housing, which is currently lower, PNB also, which is seeing some lackluster moves, or rather is actually down after its earnings but is falling on the back of high volumes. Maruti SBI flat in trade, but the volumes are big on these names. Kunal, there's also the readjustment of the MSCI portfolios, which takes into effect on close today. I guess because of that as well, some of these stocks must be seeing some high volumes.
Exactly, Asha. So in the last 15 minutes, I think start of 3 p.m., you saw the Nifty from down 50 points and Bank Nifty, which is down, I think, 0.9%. It scaled up, quite significantly high, because this is on the back of some extremely strong volumes on the large cap names, or on those select large cap names, which are getting rebalanced by the MSCI index. And I think that's where you're seeing a lot of the volumes picking up. So I think it's just a readjustment. So rather than being taken away by this kind of a strong up move on the Nifty, I think the context of this up move, especially on the stock and the volumes, is more on the MSCI rebalancing rather than on the individual market merit, which is where these stocks are going up higher.
Okay, fair enough. I just want to mark the Nifty Bank yet again, because I believe that there has been some sort of a reversal as well in the trend that we're looking at. So yeah, the Nifty Bank has recovered something like 300 points from the low point of the trading day, just about breaking the green line as we speak. 11,929, so it's still flat, but you can definitely see a pullback that is evident in the markets. Chakri, what's your take on financials? How have you read into the overall NBFC crisis? Clearly not behind us, and the liquidity constraints continue to plague the sector as a whole. Is it a case of survival of the fittest, even despite the fact that the RBI is taking up some norms in order to try and rein things over and improve prospects for the sector?
There are over 10,000 NBFCs in this country, and clearly there are lots of good NBFCs with very strong asset liability management, liquidity management, etc. So against that backdrop, you have the RBI, which has been providing liquidity for the last several months, will continue to do so, and has come out with a new set of guidelines. And the good news is, these guidelines are going to be phased in over a fairly good period of time, giving the NBFCs sufficient room to readjust their liquidity arrangements and how much they need to park, etc., with sufficient notice. So against this backdrop, I think you will see liquidity come in. The cost of borrowing for some of the NBFCs may not go down in a hurry, but I think the worst is kind of behind us, and the RBI has done a great job with liquidity management.
Okay. SpiceJet numbers on your screens. We still don't have more details than the PAT, 56.3 crore rupees. Just yesterday, you had Interglobe Aviation as well. Extremely bullish a commentary in their conference call, indicating that it's going to be a 30% capacity addition that they're going to be undertaking in FY20. And in light, Chakri, of one player not operational, just two of the ones which are only grabbing all the market share, how is it that you would allocate funds, if you had to, within airlines between Indigo and SpiceJet?
You know, both SpiceJet and Indigo are clearly taking market share because Jet is not in business, and clearly, you know, in fact, you know, last week SpiceJet introduced Spice Business class travel as well, for moving away from its discount airline business model. So this is a higher margin seat per revenue per seat. So against this backdrop, you know, with Jet unlikely to come back in anytime in the near future, these guys have gone unnatural market share in a great hurry, and they've been fortunate enough and smart enough to grab it. Now against this backdrop, for every 1% move in the rupee versus the dollar, it moves the earnings by about 5 or 6%. So when the rupee moves up and down versus the dollar, and the oil moves up and down, it creates a 7-8% swing. Now if one can deal with that level of volatility in earnings as a result, then yes, but I think these are good trades, but rather than long-term investments.
Okay, that's the view coming in on aviation. Revenues at 2,477 definitely have grown. Interglobe as well has seen a strong set of numbers, and the PAT performance is up nearly 21%. They're saying that the FY20 capacity is seen higher by 80%. The stock, after nosediving, has somewhat recovered now, so 1% at 147. Chakri, wanted to get in your take on the oil marketing companies. You know, over the last few days, we've seen quite a smart rally play out in some of these names, and brokerages are of the view that a strong mandate and a strong government at the helm brightens the outlook on the sector, and you know, we will see the ability for them to recoup their margins as well going forward. Do you like this space?
You know, one of the overhangs that of election, and therefore they wouldn't be having the elbow room to reduce or increase petrol and diesel prices, is now gone. So that overhang is not there. In addition to that, you have oil which has trended down in the last week or so, and so that also gives them some kind of inventory gain. So I think going into this quarter, you know, they're trading at about 4 or 5 times EV/EBITDA. Against that kind of a multiple, you have a very good volume growth. So I think these are clearly the good buys purely from a valuation perspective, and I think there's sufficient room, but of course you always have to be cognizant of what the government can or cannot do in terms of playing around with oil prices, petrol prices.
Sure. Okay, Chakri, you know, we're all, you know, counting down to first of all hear about the cabinet, and then of course you know, build up gradually towards monetary policy, budget, so on and so forth. I just want to ask you, in terms of a return scenario today, markets are so quiet overall, given the kind of euphoria we saw the last 2-3 sessions. Where to from here? How excited are you about Modi 2.0 and what we might see resulting in the markets?
You know, Modi 2.0 is, I guess, a continuation of 1.0, and from that perspective, lots of the stuff that he's done in terms of bank clear up, GST, all good things will continue, and that way there is policy consistency, which is what the market likes. There's clarity. Second, against that backdrop, you have inflation under control, which is around 4%. You have monsoon so far seeming to be on track. Now, against this backdrop, you'll probably have an RBI rate cut sometime next week. Now, if indeed that happens, that will provide an additional leg of lower the working capital for a number of these initiatives like infra companies and building roads and all that stuff, which Modi 2.0 wants to do. So in general, I think the market is well poised for a cyclical recovery now that all the major headwinds are out of the way.
Right. Chakri, you wouldn't be buying any of the consumption names, would you?
Consumption, consumption has largely been funded by NBFCs. NBFCs still have a liquidity issue, and which means, tomorrow, let's say there is a rate cut, next week there is a rate cut. It's unlikely these NBFCs are going to pass on that lower rate cut to the consumers in terms of buying their EMI. So against this backdrop, I think the big ticket item, whether it's like the autos, they are going to be sluggish for the next several months. You'll probably see a stabilization more towards the end of the year. The smaller ticket item, you're buying a fridge, a fan, stuff like that, those are easier. And so buying a Voltis, which makes ACs, those are the kinds of places that I would buy. Now you have the World Cup coming up, the Cricket World Cup. So lots of people again ordering more pizzas than usual. Jubilant Foodworks looks okay. Those are the kinds of items that companies that we would buy into.
Okay, that's the view coming in on the overall consumption space as well as what Chakri is looking at in this market. Thanks much then for joining in, and we'll let you go on that note.